What is going on out there, peeps? All right, let's talk a little bit about silver. And again, I want to touch quickly on the bail-in. I keep warning people that that is coming. It is. We're going to talk about that here in just a moment. I'll take about 1,000 of these, please. Thank you. Speaking of buying silver, when you're ready to buy your gold and silver, go to our friends over at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and get a free half an ounce of silver. You really want some money out of the system. I'm going to show you once again why you need gold and silver, why you need your money out of the bank, and why you should protect yourself from a bail-in. Anyways, for those of you looking for my address, there he is right here. You guys know I have this alternative website over there where I post videos that I cannot post here on YouTube. And just so you guys know, because sometimes this happens when you go and you pay with your card to get onto the site, sometimes the payment doesn't go right away. It takes a few minutes. So if you can't log in right away, just give it a little time and to go log back in and you'll be good to go. Go show some love over there at our friends at Wall Street Silver. They have a YouTube channel as well as a Reddit page. The links for both are down below. You know we have Pimpy's Investment Chat. Over here it's a Facebook group, same name as the YouTube channel. Over here we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. I encourage you to come on over here and join us. It's free 99. So let's see where we are currently with the markets. Everything seems to be in red. So cryptocurrencies are going down again, but not like, how we seen them go through. They're running pretty horizontal for right now, and that seems to be the case with a lot of assets, which is very interesting. By the way, gold still lingering around about 1816. Silver still around 25.54. We're going to talk about the real value of silver. I told you guys this is the paper market value. That's not the real value of silver. We will get into that here in just a moment. Was paying attention to the market as far as, or I should say, the live graph, which gives me an idea of what's going on. Ever since that big drop, it's been doing its thing. It's not going to stay around this much longer. I don't know how much longer to be able to manipulate the markets like this. Again, we're going to get into that in just a little bit, but I do want to get back over to bail-ins. So thank you. I'm going to shout out to Juliana. I don't want to say her last name because, I didn't get permission, but she sent this to me and asked me if I'd seen this. And I said, yeah, I'm seeing these pop up all over. I did one in Canada. Here it is, people over in England. Just happens to pop up on the Bank of England. Putting this out there so you guys are aware. Published on July 22nd of 2021. Not that long ago. Executing a bail-in. Here is another bank, another country, explaining to people what a bail-in is. Now, just like the last video I did on the ones in Canada, pay attention to the trickery of words. Word magic. Executing a bail-in. An operational guide from the Bank of England. Well, how nice of them. How nice, huh? That's what I'm talking about. Today, the Bank of England published Executing Bail-in, an operational guide from the Bank of England. So when you guys go, there's no bail-in, okay, keep your money there. And keep in mind, when this happens, it's going to cause a crash. It will affect your 401ks. It will affect your IRAs. Any savings that you have, that's why I keep saying, at the very least, take 25-30% of your savings or retirement and move it over into gold and silver. Keep it with you. So if something does happen and the markets crash and the banks go to hell in a handbasket, you are protected. I've also said this many times. Try to calculate up what your monthly bills are. Do 6 months worth. Add on another 10%. If you could do more, do more. Stash it somewhere in a safe or somewhere in your house out of the bank. So when a bail-in happens, guess what? It doesn't touch that money. So here we go. Bail-in is one of the stabilization tools available to the bank as a resolution authority under the Banking Act of 2019. Now keep in mind, this here, Banking Act, these are recognized as given down by the BIS, which is the Bank of International Settlement. For those who don't know who they are the central bank of central banks. They've been giving out these monetary policies to all these central banks. Which chaps my hide is over here in the United States, the Constitution forbids us taking instructions or monetary policy advice from anybody outside the United States. So why are we going into a central bank digital coin like everybody else? Why do we have this very same monetary policy as everybody else? See, they don't like to keep you informed with the law, because then you start questioning it and you see that they're really up to no good as usual. Bail-in is one of the stabilization tools available to the banks as a resolution authority under the Banking Act of 2009. Bail-ins ensure investors, rather than public funds, bear the losses where a firm fails. Pay attention to the wording. Bail-in ensures investors, rather than public funds, bear losses where a firm fails. Now, when you first look at this, you go, investors? Oh, you mean like people buy stocks and bonds and stuff, rather than the public funds? Oh, in other words, my money in the bank is safe. Okay, good. Then it doesn't affect me. I don't care. No. No. And you see, here's the parts that they keep leaving out when they're informing the public about what a bail-in is. You see, what the bank does is take all of the money. And remember, when you open up a savings, checkings, any kind of account, once you deposit that money into the bank, it legally doesn't belong to you no more. You sign those papers when you open up your account saying that you give ownership of your money to the bank to do whatever they want to and need to when the time comes. That's why you're seeing people with large dollar amounts in their account right now having trouble taking out money in large amounts. The banks won't let them do it. So, let me explain again how the bail-in works. So, all of your money, including cryptocurrencies, all of the money, and sure, put it in a ledger. For those of you who got cryptocurrencies, get a nano ledger. But you see, sooner or later, you have to come back and assist them. And what I mean by that is this. Your cryptocurrency is tied to a bank account. As soon as you go to sell them, that money goes into that bank account. So I'm not sure what happens to your money if you hold on to the cryptocurrencies, take them offline, a bail-in takes place, and you're still holding on to your cryptos, and then sometime later on, when everything, all the dust seems to have settled, and you go to cash in your cryptocurrencies to that same bank, I'm not sure if it's not flagged somehow. I'm not saying it is, but it's something you want to be careful about. So there you go. You're like, oh, it's been several months. Everything's back to normal. Cool. I'm transferring my money, and they go, This account, this cryptocurrencies were live during the bail-in, taken offline, and now are cashing in. Make sure they pay their fair share. Whoop it and take your money. I'm just making that part up, but I don't know how that's going to work. So to be on the safe side, if you insist on keeping your cryptocurrencies, transfer them over to a thumb drive, a nano ledger. Take them offline. If a bail-in happens, then maybe you open up another account and then link it to your new crypto wallet. And then when you cash it in, nothing will happen. I don't know. I'm just throwing that out there. I'm not sure how that's going to work because cryptocurrencies are included on there. Yes, they are. How they go about getting your cryptos, I don't know. But you guys seen it in the video that I showed you. So back to what I'm talking about. This is how the bail-ins work. They take all your money. Checking, savings, yes, retirements. You seen what they did on the Canadians version of the bail-in? They try to be slick with their words. They go, oh, we take all the investors' money, but not the depositors. They're just misleading you in words. So sure, they take all of your money, just like in Canada, all your cryptocurrency, they take it all. Savings, everything, gone. And see, they wouldn't be lying by the way they worded it. See, they don't take all of the depositor's money. You will be covered by the insurance on your account that banks have. In our case here in the United States, we have the FDIC. So we're covered up to, I think it's 200. It used to be 250, but $200,000. So anything 200,000 and down would be covered by the insurance. There's a lot of you going, well, hell, I only got that much money. Yeah, but I'm talking about IRA, retirements, everything gone. And sure, you don't have more than that. I get it. But you still got to go through the hassle of them taking your money. You standing around waiting to find out what's going on. Who knows, months, weeks, several days later, before they tell you, before you even have access to your money. Now here in the United States, you've seen Lynette and Zhang show you guys several times. I've shown you guys several times. The money in the kiddie pool for the FDIC is not that big. By the time they get to paying out their insurance claims, well, they'll just file bankruptcy because they don't have the money to give to you. So even if you have a small amount in there and you think you're going to get covered by the FDIC, you have another thing coming. Their whole goal is to take all the money. You're still not seeing the bigger picture. So how this works again is a bail-in. They take all the money, and you go from being a person that is a client or a customer at the bank with your money in there, whether it's checking, savings, or anything else. You move from that now into an investor. Yes, they issue you common stock in the bank at what they determine is the value of the stock. And you get your payment on your stock after they pay out all the money that they need to stabilize the bank if they can. If the bank goes belly up, you are SOL. And they'll just blame it on the Rona, and they'll blame it on this, and they'll blame it on that, and they'll surely find a way to blame Trump for all this. And they'll say, I'm sorry, but this is, you guys knew, it's right here. And you're going to go, wait, that's not what this says. And they go, yeah, it is. You go from being a customer of the bank into an investor. And when they say rather than public funds, what they're talking about is taxpayer dollars. Yeah. You see, instead of a bailout where taxpayers pay for it, they do a bail-in. They're like how they did that law. I told you, they always go, yeah, we're sorry about what happened. You guys got screwed out of all your money back in 2008 and 9. But guess what? We're going to pass a law that protects you. So instead of you having to pay your hard-earned taxpayer dollars, no. We're going to shift the burden over to them. You know, those evil investors, the 1%ers. But what they actually do is trickery. You think, hey, it doesn't take our taxpayer money, which is public funds. They go after the big 1%ers. No, nobody really super rich has any real money in the bank. They don't. I told you this. It's one of the craziest things I ever learned about rich people. They don't keep their money in the bank. They have it in assets and commodities. You know, collectible cars, coins, comic books, sports cards now apparently, real estate, houses, paintings, things that are tangible, things that they can just grab at any time, things that they can quickly sell. They don't keep their money in the bank. They keep it in stocks and bonds because they make more money than leaving it in the bank. But when they see crap like what's going on happening right now, they quickly get their money out of stocks and bonds and start investing it into gold and silver and paintings and real estate and other collectible assets. So are they really hitting the 1%ers? No, they never had any intentions in doing it. You become the investor when they flip your savings into stocks. The public funds that they're talking about are taxpayer dollars. The bank has previously published an overview of the process has designed for conducting a bail-in and the exchange mechanics set out by the blah, blah, blah. The bank published further information, including where'd I go? Where the heck? Oh, right where the curse is. The bank has published information, including indicative styles resolution timelines. So they're trying to tell you, or indicative stylized further information, blah, 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 including, again, or I already read that, resolution timelines, which provide an illustration of how the bank anticipates a bail-in resolution may be conducted. So you guys need to go see that. And they're also giving you a timeline. You're going to see it's not as quick as you think. The operational guide provides practical information on the ways in which the Bank of England might execute a bail-in resolution. Why are they all of a sudden, banks everywhere, starting to make sure that you see as clear as day what a bail-in is? It's almost like they're prepping you for something. Well, we see in the United States, they posted what a bail-in is. We saw Canada, they posted what a bail-in is. Now you have the Bank of England posting what a bail-in is. Something fishy's going on. So again, I don't know how many more warnings, signs, signals you need to protect your money. They take the money that's in the banking account. So I get it, I got to pay my bills and everything. I get it, so do I. But what happens is when I get ready to go pay my bills, I know what I got to pay, how much I got to pay. Then I take my metals, sell what I need, get the money, go to the bank, deposit it, and then pay my bills. Don't touch your reserve money just in case. But other than that, my money stay in the metals. I don't play with the currencies. I don't play with them fake fiat dollars. No. So, again, people, just be careful, be aware that here we have another bank letting people know casually what a bail-in is and using trickery with language to mislead people into thinking your money is safe. It's not. Going over here to SD Bullion. James. I love James's videos. He's very informative. I'll leave the link for this video so you can check the whole thing out. James is he's going to show you, like I said, the market value here is not the real value of silver. That is the paper market. So we're going to listen to what James has to say because he's going to show you what silver currently is really going for. And the fact that there are people out there recognizing that value.
A high-quality silver derivative versus physical bullion infographic was released this past week by the Sharp research team at Singapore's Bullion Star. They note that for the year 2020, over 234 billion paper derivative ounces of silver were traded between the London and New York COMEX markets. That is over 240 times the amount of physical silver that got mined for the same year, 2020.
So for those who don't understand what he's saying, he's talking about the paper silver, which is these ETFs, like stocks. So you see when I say, hey, that's the market, that's the paper value of silver, that's what these things are he's talking about. You see, they're supposed to be selling and trading their stocks based on actual physical silver they're supposed to have. But then they start changing the rules and lying to people and selling way more silver than is actually mined. How are they doing that? It's crazy, huh? They use it to control the markets. So when they go, well, silver price took a huge dive because everybody's selling silver because they feel confident in the economy. No. You dumped paper silver on the market and caused the price to go down. It looks like people are dumping silver, and for amateurs who don't know what they're seeing, they panic and they actually part with their physical silver. Don't do that. I can tell you right now, my subscribers are savvy as hell. They are not falling for this trickery. Okay, so that's what James is talking about. So let's get into this.
Here's how ridiculous a level of leverage broke out between the two suppressive price discovery systems, and based on the reporting underlying ounces, which I showed you is often double counted between the two organizations. Now here's how this level of leverage works in terms of keeping silver prices in a polite range for the vast majority of the last 50 years of time. This is the price of silver at the bottom, aggregated inside New York COMEX trading hours, the black colored line. Beginning in 1970 with the price point at $1.92 per ounce, the rolling intra-New York COMEX silver futures price has dwindled down to a mere 21 cents an ounce over the last near 51 years of time rolling. The red spot price line shows the silver spot price dip we saw in the middle of this past week when silver dipped below 25 per ounce when I pulled this chart out. The blue line is aggregate silver price data traded outside New York COMEX trading hours in the last 51 years of time.
Say what? James, what are you saying?
It has rolled and added up to nearly over 230 per ounce now. Here in the year 2021, and since the year 2011.
So James is going to talk about this. See that red line? That is the market value that we see up there. See that blue line? That's the true value, close to the true value of silver. But you notice whenever they start to gape or separate, something happens and they revalue silver and it catches back up. Then it separates again, they revalue, catches back up. Separates, revalue. See a trend here happening? Whoa, extreme close up. Thanks, Wayne. Oh, sorry. Oh, back up here again. 2008, 2009. Boomy. Guess what's coming? You notice the red line goes up to meet the blue line. I'm just throwing it out there so you are aware. The red line, sitting here at about $25 an ounce, always moves up to meet the blue line.
We have been in this fifth era where the blue and red lines have diverged. Each of the prior 4 times in which these lines reconverged, it happened with a rapidly escalating silver spot price and value. This next, the fifth convergence, the reconvergence of these two red and blue lines, should become the all-timer for silver. Now turning to the gold market, here's a look at how reported official gold bullion buying by central banks looked for the first half of 2021.
Oh yeah.
Now this...
I told you guys, pay attention. Countries everywhere are buying up gold like crazy.
World Gold Council chart doesn't take into account that an additional 70 metric tons of gold bullion was bought or is being bought by the Russian Sovereign Wealth Fund this summer. In terms of the timing on how long this 21st century bullion bull market is taking to play out versus the miniature 1970s version, on a time scale, it's taking about 2.5 times longer for gold to do its manic revaluation upward.
This is what it looked like in 1970. The red line is where we are now. Notice something here? We are here. Look where we're getting ready to go to. Ooh, fell back down a little bit.
Accounting for the massive amounts of fiat currency issuance outstanding and created since the last time it did so in the early 1980s. In terms of when is silver going to break out, having been stuck in a year-long sideways trading range it's been in, I can't tell you with certainty when that's going to occur. What I can show you is that in the 1970s silver bullion bull, we also had a massive U-cup that silver had to grind through and break beyond 6 fiat Fed notes per troy ounce before going into its manic exponential phase, multiplying over 8 times in just over 1 year of time following the breakout. So how long will it take to not only get past 30, but again be banging on the door of 50 per troy ounce and finally blow through that level? Well, using the 2.5 times longer duration the 21st century version's taking versus the prior 1970s model, the year 2023 might be on time for silver's manic exponential phase to blow off and roll ahead. For now, we end this week's SD Bullion Market.
Thanks, James. I will leave a link to this video so you can go check it out for yourself. 2023. You know what's going through my mind about that right now? Good. I got some time to go ahead and start. I got some time to go ahead and start stacking up on more silver. Again, this is just people's opinions based on history, based on charts, that all you can do is guess. Because you know how evil our banking people are with our government and everybody else. So God only knows. But there's no doubt there's something going on and everything is being pushed towards 2023. Well, it was, but now it's all of a sudden being expedited. It might have something to do with this recent poll about the people on the left in politics losing almost 50% of their support from their own supporters. With midterms coming up, I'm pretty sure that's what's on their mind. So, when I tell you that this is the paper market value, this is not the real value of silver. That's what I'm talking about. Those are ETFs, those are your stocks or whatever in silver, paper silver. That's the value for paper silver. It is manipulated. So once again, we have another bank letting everybody know, just as a refresher's course, hey, this is what a bail-in is, just in case something should happen. I'm not saying it is, but just in case something should happen and you people start going, what's going on? You can't say I didn't warn you. Protect yourself, protect your family, protect the money that you have. Safes do not cost that much money. It's nobody's business where you put it in your place. For people who can't afford a safe, I'm sure there's some way, somewhere you can find a safe stash spot. I wasn't lying when I said I do not keep money in the bank. It's all in precious metals. For whenever I need it, I go sell some to pay off what bills I need to get by. I do have currency or fiat dollars sitting there. Start getting it out a little at a time if they won't let you take it out all at one time. Start accumulating it. 6 months for all your expenses, calculate it. Add 10% for miscellaneous. If you could do more, then do more. But now you know why rich people don't keep money in the bank. They're going, damn it, I don't want to keep $6 million in my bank account. I already have $20 million worth of gold and silver sitting over here. What do I do with my $6 million? Oh, good Lord, look at there. Van Gogh, $6 million. There you go. Boom. Bought a Van Gogh. Just wrap that baby up, stick it somewhere, up in the attic, and let it collect dust. And when the dust settles, no pun intended, I'm going to go sell my paint and get my money back. That's it for now. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.